Welcome, curious minds. Today, we're diving deep into the story of a man whose name, well, it's pretty much synonymous with investing.
Warren Buffett.
Exactly. But his full life is far richer, more complex, and frankly, more human than just stock charts. We're using Alice Schroeder's authorized biography, The Snowball, as our main guide.
Which is a fantastic resource. Really comprehensive.
It really is. It's not just about finance. It's an intimate look at his character, his choices, and, yeah, some fascinating contradictions, too.
Indeed. Published back in 2008, The Snowball gives this really rare glimpse into the mind of one of the world's greatest investors. What makes it so good is that it covers everything, not just the investing career, but also the personal relationships, the values, the sometimes, let's say, unconventional decisions that really shaped him. It's a whole picture.
And that title, The Snowball, it's brilliant. Comes straight from Buffett himself.
Yeah, it's his core metaphor.
It's about starting small, rolling it steadily day after day, year after year, and just watching it get bigger.
Compounding.
Precisely. And we'll explore how that applies to way more than just his wealth. It's his wisdom, his influence, his legacy. So, our mission today, let's try and pull out the most important nuggets from this book so you can really get a feel for what makes Buffett tick. As an investor, sure, but also just as a person.
Sounds good. Where do we start?
Okay, let's unpack this. Let's rewind right back to the beginning. Omaha, Nebraska.
Right in the middle of the Great Depression.
Yeah, smack in the middle. His father, Howard Buffett, was a stockbroker, later a congressman. But even as a kid, Warren wasn't, your typical kid building sandcastles or whatever. He seemed different.
Not at all. It's actually remarkable how early his, let's call it an obsession with numbers, probability, and just making money showed up.
Like what sort of things?
Well, the book talks about him collecting bottle caps, meticulously tracking their market value.
Seriously, bottle caps?
Yeah. Running multiple paper routes, figuring out the most efficient way, tracking baseball stats with this incredible intensity.
Wow.
These weren't just kid games, They were early lessons, data analysis, understanding odds. That entrepreneurial spark was already there.
And he was a reader too, right?
Oh, definitely. Books like 1,000 Ways to Make $1,000. And then the really crucial one, Benjamin Graham's security analysis.
Ah, security analysis. That feels like a real turning point. So many investors still talk about it.
Absolutely foundational.
So what was it? What did Graham teach him that became like the bedrock of everything he did later?
Well, it really gets to the core question, doesn't it? What is value investing?
Right.
Buffett actually studied under Graham at Columbia Business School. He soaked up these core ideas.
And a main one?
The biggest one was buying undervalued companies with a significant margin of safety.
Margin of safety. Explain that a bit.
It's not just about finding a bargain like a cheap stock. It's about buying an asset for demonstrably less than you calculate its real intrinsic worth to be.
Okay.
It creates this buffer, a cushion, protection against mistakes in your own analysis or just bad luck, market downturns.
So it limits the downside.
Exactly. It gives you room for error. And for Buffett, that was absolutely critical for long-term success. He then worked briefly for Graham's firm, Graham Newman.
Putting it into practice.
Right. Then he went back to Omaha in the 50s, started his own investment partnerships, and just hammered away using those exact principles.
And the results from those early partnerships, I mean, when you read about them, they're just staggering.
Astonishing, really. The compounding rates were just off the charts.
How did he do that? Consistently beating the market by so much year after year from Omaha.
Well, it seems like it was this combination of, first, absolute discipline in applying Graham's value principles, finding those really cheap, neglected companies.
Okay.
And second, reinvesting everything. He famously didn't take fees unless he cleared a pretty high return hurdle first. Total focus on compounding the capital.
But then he switched gears, didn't he? He dissolved those partnerships.
He did. In 1969, he dissolved them and shifted his focus onto something that looked completely different on the surface.
Berkshire Hathaway.
This struggling textile mill he'd bought earlier. A business in decline, really.
Right, a textile mill in New England. It seems like the opposite of what a value investor should do.
Yeah.
Who's that become this global powerhouse worth hundreds of billions?
Ah, well, this is where you see Buffett's genius evolving, if you zoom out a bit.
Yeah.
He didn't see Berkshire as just a textile company. He knew textiles were dying. He saw it as a vehicle.
A vehicle for...
Capital allocation. He saw it had some cash flow, even if small, and instead of pouring that cash back into the failing textile side.
He used it to buy other things.
Exactly. He started acquiring other, better businesses outright, high-quality companies he could understand.
Like See's Candies, D-Ico.
Precisely. Iconic names. Dairy Queen.
Yep.
Businesses with durable competitive advantages. And he also started taking big long-term stakes in public companies.
Coca-Cola, American Express.
Yep. Wells Fargo, becoming a significant owner, not just a trader. It transformed Berkshire into this giant holding company. It was the ultimate long game.
So through all that, he's refining his philosophy, moving beyond just finding those cheap cigar butts, as Grant called them.
Right, those companies with one last puff of profit left in them.
To buying quality. His principles are quoted everywhere now. What are the really key tenets that drove that growth?
The book really highlights a few crucial ones, showing his evolution. First, that big shift in his mantra.
The famous one.
Buy wonderful businesses at fair prices, not fair businesses at wonderful prices.
What does that really signify?
It signifies a move away from just cheapness. It's about identifying genuinely high-quality businesses, ones with sustainable advantages, what his partner Charlie Munger later called an economic moat.
Munger's influence.
Huge influence. Realizing that a great business, even at a fair price, would likely outperform a mediocre business bought super cheap over the long run. It's about long-term value generation, not just immediate price.
Makes sense. What else?
Second, just the raw power of long-term holding. Patience, letting compounding work its magic. He wasn't trading stocks, he was buying pieces of businesses to own. Right.
And third, a really keen focus on the quality of management. He recognized that great leaders are just as vital as strong financials. He looked for integrity, competence, passion.
And he trusted them to run things.
Yeah, gave them a lot of autonomy once he acquired them.
So that's the investing genius, the Oracle of Omaha side. But the Snowball goes much deeper, doesn't it, into the person?
Oh, absolutely. It paints this really nuanced portrait, a man of quirks, contradictions, very human.
What stands out on the personal side?
Well, the obvious contrast is his immense wealth versus his personal life. Billions and billions, yet he lived in the same relatively modest Omaha house for decades.
Yeah, that's legendary.
Loved his Coca-Cola, hamburgers, playing bridge. He avoided all the usual trappings of extreme wealth. Very grounded in that sense.
But the book also covers his marriage, which was unusual.
Very unconventional. His first wife, Susie, moved out to pursue her own life, but they stayed incredibly close emotionally. She was a huge influence on him.
And he later lived with Astrid Minks. Correct. Who eventually became his second wife after Susie passed away. It was this unique setup that somehow worked for them.
It points to a certain tension, maybe. So rational in business, but this complex personal life.
It does seem that way. Schroeder suggests that his intense, almost obsessive focus on investing, well, it had a cost.
Emotionally.
Yeah, particularly with his children sometimes. That single-minded dedication could make him seem distant. It's a reminder that genius often involves trade-offs, you know?
But the book also stresses how important those relationships were.
Absolutely crucial. You have Benjamin Graham giving him the intellectual toolkit.
The foundation.
Charlie Munger sharpening his thinking, pushing him towards quality. That was a pivotal shift.
Right.
Bill Gates, who became a very close friend and really influenced his thinking on philanthropy later on.
Ah, yes, philanthropy.
And then his first wife, Susie. The book makes it clear she played this absolutely central role in his personal growth. She was kind of his anchor, connecting him to the world beyond balance sheets, broadened his perspective hugely.
Which brings us to philanthropy. Because for a long time, he resisted giving large amounts away, right? He preferred to let the snowball grow.
He did. He argued he was better at compounding the money than charities might be at spending it initially.
But then, 2006, this massive pledge to give almost all of it away. What changed?
It seems like it was a combination of things, but heavily influenced by Susie's long-held beliefs and his friendship with Bill Gates.
So personal connections again.
Definitely. Susie had always pushed for more impactful giving, and her influence remained strong. And seeing the Gates Foundation in action provided a powerful model.
It showed him a way.
Exactly. It helped him see how his wealth could have this enormous lasting impact. Committing the bulk of his fortune, tens of billions, to the Gates Foundation and family foundations was just monumental.
One of the biggest philanthropic gifts ever.
It really underscores that his snowball wasn't just about money in the end. It became about compounding good, building a different kind of legacy.
So, beyond the investing specifics in the biography, what about those timeless principles he lived by? The ones that apply to anyone, really.
Yeah, the book distills several key ideas that are just powerful life lessons.
Like what? Give us a few.
Okay, first, obviously, the power of compounding. Patience and discipline over time. That's not just money, it's habits,
Yeah.
learning, relationships.
Like learning an instrument, maybe. Small practice every day.
Perfect example. Or building trust. Small, consistent acts compound. Second, the circle of competence.
Stick to what you know.
Basically, yeah, know your limits.
Yeah.
Stick to industries, skills, situations you genuinely understand. Have the discipline to say no to things outside that circle. Don't try to be an expert in everything.
Good advice.
Third, that margin of safety again, but applied more broadly. Don't sail too close to the wind. Build buffers in your life financially, maybe with your time. Planning.
Like leaving extra time to get to the airport.
Exactly. It reduces stress, protects against unexpected problems. Fourth, the importance of integrity. Partnering with trustworthy, capable people, that applies everywhere. Work, community, friendships.
Trust is key.
Fundamental. And finally, simplicity. Avoid unnecessary complexity and leverage. Often the simplest approach is the most robust and least risky. Whether it's your investments, your schedule, whatever. Keep it understandable.
Those are definitely more than just investing tips. They're really principles for living.
For sure. Incredibly valuable life lessons.
So, wrapping this up, what's the big takeaway for you, the listener? The Snowball isn't just an investing manual.
Not at all.
It's this deep, sometimes challenging portrait of a remarkable person. Flawed, sure, but also really inspiring. It shows how character, core values, and just relentless discipline applied consistently can build not just wealth, but a truly profound legacy.
Yeah, Buffett's Snowball ended up being more than money. It's his wisdom, his reputation, his influence, all growing over his lifetime.
Exactly. The book really drives home that true success, whatever that means to you, is usually built with consistent, principled action over the long haul.
Even if the path looks a bit unconventional sometimes, and it reminds us that even these financial titans are, deeply human, shaped by relationships, struggles, the whole deal.
It's a powerful look at the long game of life.
Definitely.
So for you, the learner, here's something to think about. If your life were a snowball, what are you consistently rolling forward? Is it just about the money? Or are you also compounding wisdom, strengthening relationships, growing your positive influence, mastering a skill? What kind of legacy are you building one steady roll at a time? Something to mull over until our next deep dive.